In a move surprising pretty well no one after the results we saw in the first quarter, Equinox Gold has cut production guidance, and not just at Greenstone, but across the board. And while production guidance has been reduced, as you can likely assume, expected costing has gone up dramatically, as has funding earmarked for growth capital and exploration. The bright side to this, if you can really say there is one, is that guidance previously issued for the Calibre assets pre-merger announcement has remained unchanged. Let's dive in. Don't miss the Rural Symposium for Natural Resource Investing happening July 7th in Boca Raton. If you can't make it in person, that's not a problem. You can get your ticket to watch live online or on demand. We'll be there with the deep dive, so if you make it out to Boca, come say hi at our booth. If you want to sign up, click on the link in the description to get your pass. Equinox Gold on Wednesday evening issued revised 2025 production and cost guidance. On the surface, the company stated that the revised guidance was a result of the combination with Calibre Mining, while the headline pointed to a strong second half of 2025 at Greenstone. But then the first paragraph of the release basically said otherwise. The real reason here was a dramatic change in production and cost guidance at Greenstone due to a slower than planned ramp-up. How bad is it? Well, original guidance called for Equinox to produce 635 to 750,000 ounces of gold in 2025, with cash costs in a range of $10.75 to $11.75 an ounce, and AISC in a range of $14.55 to $15.50 an ounce. Now, with a contribution of 230 to 280,000 ounces from Calibre's assets on a pro forma basis, Equinox is expected to produce between 785 and 915,000 ounces, which is down from the prior assumed range of 865,000 to 1 million ounces. In other words, the guidance midpoint in terms of gold production has fallen from 948,000 ounces to 850. With this guidance change, of course, coming after this business combination was sold on the idea of a gold major that was expected to produce approximately 950,000 ounces of gold in 2025, which is not good. Cash cost expectations, meanwhile, have changed to an average of $14.50 an ounce on a midpoint basis across the board, while AISC expectations have jumped to a midpoint of $18.50 an ounce. Growth capital is expected to come in at about $205 million this year, while exploration expenses are expected to settle out at about $80 million. The issues here largely stem from Equinox's Greenstone operation. Production guidance here has been cut from a midpoint of 325,000 ounces in 2025 to a midpoint of 240,000 ounces. And with a cut of 85,000 ounces of production, which is nearly a third of expected output in 2025, you can imagine what that did to cost estimates. Well, previously, total cash costs at Greenstone were expected to be in a range of $790 to $890 an ounce, which works out to a midpoint of about $840 an ounce. That range has now been increased to $1275 to $1375 for a midpoint of $1325 an ounce. That's a 58% increase in expected costing. AISC, incredibly, was worse. The prior range of $1045 to $1145 an ounce for a midpoint of $1095 an ounce has been increased to a range of $1700 to $1800 an ounce for a midpoint of $1750, which equates to a jump of 60%. Growth capital expenditures here have also expanded, moving from $35 million to $82.5 million on a midpoint basis. So what went wrong? Mine productivity and equipment availability, primarily the primary loading fleet, have not gone to plan. This in turn has impacted mining rates and delayed access to higher grade ore zones. Grades have also been below expectations, which has partially been blamed on higher than expected dilution. The processing side is also said to be facing issues, with throughput and recovery performance below plan year to date. An improvement and optimization process is said to now be underway, with additional staff deployed to site to rectify the ongoing issues. May mining rates are said to have improved by 25% relative to the Q1 performance, with mining rates now averaging 175,000 tons per day. Quarter-over-quarter improvements are expected, but with that being said, Q1 production totaled 44,400 ounces. And with the current guidance provided, it suggests that improvements are expected to be slow coming in. But this isn't entirely shocking, considering the Canadian-based operation in the first quarter saw unplanned downtime due to cold weather. Well, the company has been beat up on the message boards over their performance at Greenstone. What others seem to be missing is that guidance was cut across the board. The Brazil operations have seen their midpoint move from 270 to 260,000 ounces, while total cash costs saw their guidance move from a midpoint of $14.15 an ounce to a midpoint of $17.75 an ounce, a 25% jump. And the ASIC guidance midpoint moved from 1905 to 2325 an ounce, a 22% increase, which is after growth capital expenses fell from an expected 51 million to a midpoint of 37.5. And at Mesquite, production guidance fell from a midpoint of 97,500 ounces to a midpoint of 90,000 ounces. Cash cost expectations may have fallen by $35 to a midpoint of $12.50, but ASIC expectations rose from $17.75 to $18.50 on a midpoint basis. No explanations were provided for any of these changes. All right, so let's wrap it up. When it's all said and done, the guidance cut wasn't exactly shocking. After the Q1 performance at Greenstone, everyone was basically sitting around waiting for this announcement to come out. Equinox in the first quarter overall produced 145,000 ounces, which means they're basically expecting this sort of production performance from here on out for the remainder of the year. While that rate of production doesn't put them on a path to beat the performance of 2024, which saw just shy of 622,000 ounces produced, it could always be worse. As for Calibre, we should note that their guidance is unchanged from what was previously published. The guidance also doesn't include their Valentine project, which is expected to come online over the third quarter of this year, so that will give the pro forma company a bit of a boost when they announce their final production figures for the year. All right, everybody, thanks for watching. If there's stories you want us to cover, as always, let us know in the comment section. We're pretty much done earnings videos. We might find the occasional company that we're going to cover. But now we're kind of looking for mining stories. So if there's stories out there that you want us to look into, technical reports, scandals, whatever the big headlines are, let us know in the comments section. We're kind of growing this community, which is pretty fun. We've been doing this for 7 years, but it feels like we've really sort of found our legs under us over the last year. And a lot of that is thanks to you guys who keep responding to us in the comment section. I promise you, we read them all and we're trying to do our best to serve you guys. All right, everybody. Thanks for watching.